Franco-Nevada, the name alone carries weight in the royalty and streaming world. But is it all hype? Is it overvalued, like so many people are telling me? Or is there a solid investment thesis behind it? Today, I'm going to break it down. I'm going to give you a free preview into my latest Substack article and invite you to check it out for a free trial. Stick around, and I know you're going to enjoy it. Guys, welcome back to the ROI Club. This is where I break down some of my crazy thoughts and put them out there to the world. Disclaimer, nothing I say here is advice. It's not even necessarily something that I am buying. Just because I'm talking about something, if you actually go through and pay attention to what I've been saying, sometimes I say something is not good value. Sometimes I say that it is, but I'm not buying. There's lots of nuances, a few in and between the lines. So let's take a look. Franco-Nevada, what is Franco-Nevada? Well, Franco-Nevada is the original streaming company, really. It was started by Pierre Lassonde back in 1983, I believe, with the Gold Strike mine. It is a metal, they took the energy royalty model and they mainly focused in on metals, in particular precious metals, more specifically. So it's a royalty company. It's an asset-light, high-margin business with zero direct operational risks in terms of the mine. We're going to see how they do have some exposure to the mining. It has outperformed both the gold price and the S&P 500 since it was re-IPO'd in around 2007. So what happens here is they provide capital to miners. You're a miner, you need cash to be able to either start your mine, continue operations, or develop and expand new production capacity. These guys basically the intersect between a mining business and a finance company. So they'll cut the checks in exchange for percentage of revenues, and that might be a straight royalty or it might be a stream. A stream is where there's an agreed price at which they will buy the metals from the producer, and that can be 5%, 10%, 20% of spot. Okay, so if the gold price is $100, let's just say, they could buy it, they could have a locked-in contract to buy it at $5, $10, $20 per ounce, whatever the agreement says. So we're going to have a look at a real agreement that they have done with our friends at Sibanye Stillwater. And obviously, that is a really, really, really good business model. So it's no secret that I like this type of business. So let's talk a little bit about the performance, and we'll compare Franco-Nevada to what they sell mainly, which is gold. We'll compare Franco-Nevada to the broad equity base, and we'll use the S&P 500 just for simplicity's sake. And we'll compare Franco to its main rival, which would be Wheaton Precious Metals. Okay, so let's take a look. What I've done here, put together a total return for Franco versus the S&P 500 and gold bullion. And this has been done since they re-IPO'd. So from 2013 to 2023, I could get the best data. And so this is what you're looking at. Obviously, this will change depending on when you choose your start and your finishing terms. Okay. So gold bullion, even in a pretty benign environment, it's done reasonably well. I mean, 7.5% CAGR is nothing to be sneered at. And that is why, if you check out on my Substack, I perform alchemy every month, where I choose to put 90% of an allocated amount of savings simply in gold bullion. Okay. The S&P 11.23% CAGR, so outperformed the bullion over this particular time frame. And then Franco on top of that, double the performance of that which it supposedly sells, which is gold. It's not really a gold business, it's a finance business, guys. And this, I hope, gives you a good appreciation for that. There are many ways in which many ways they operate that allow them to do this. One is to be able to invest counter-cyclically. So when the gold price is down, they can usually get better deals on further royalty and stream projects. However, the big one for me, again, is just this asset-light, capital light hard asset business with plenty of call options out into the future. And this is where I think people really don't understand Franco-Nevada in terms of the business and the opportunity that it presents. So if we take a look here, let's look as far back as we can get reasonable data on trading views. So top line here, you've got Franco-Nevada. Okay. Interesting to note, it's just poked its head above the 200-day moving average there. So that could mean we're getting a little bit more buying momentum. People are realizing that some of the near-term bearish factors for the company are going to be well and truly overcome. Then we look at its competitor, Wheaton. and it's done extremely well also. I don't think you'd really complain if you owned Wheaton and gold here in US dollars to compare both of the aforementioned. Okay, so Franco over the longer term has outperformed Wheaton. If you shorten the time horizon, things get a little more interesting. I last year was asked why I was buying Wheaton over Franco, and I thought that Wheaton at the time represented a better opportunity. Here again, same three metrics just over the last 5 years. So almost on the back of during COVID and there onwards. So they start off fairly similar. We see a big rise in the gold price. We see Wheaton do extremely well over and above the price of gold, and Franco has lagged behind, mainly due to production issues and mainly due to a change of strategy. So Franco-Nevada really decided to go all in terms of a higher gold price. So a lot of their projects aren't even in production today, and they won't be in production until you hit a higher gold price. So that's the part I think a lot of people are missing. If you're just looking at Franco and you think that it's got, if I take you behind the scenes here to one of the articles, if we look in and see some of the multiples that are being asked today to buy the stock, people just simply look at that very cursory glance, not much more analysis, and say it's too expensive. One, I'd say that that's basically the same P ratio for the S&P, which is really at the moment cap weighted, which is to say it's really tech. The S&P is really seven, eight companies at the moment. And I think that there, without going into it in any further, you can read the article. I make the point that what has allowed them to grow, I question whether those same factors are going to continue into the future. And in fact, they're starting to inflect the opposite way. And in fact, that's being reflected in their 10Qs. We'll go into that perhaps at another time. So 4 or 5%-ish, and depending on your reading, free cash flow yield, I'm getting it paid to buy the company today. Obviously, that's not particularly great, and I don't think that's higher than inflation. But I think people are missing a return to production, a higher gold price, and their whole book of call options. Something like 72% of their entire book isn't even in production yet. And that gets missed if you're just doing models and trying to do DCFs for this sort of thing. People have no idea. Okay. So it does take a little bit of forward thinking and the ability to think around corners, basically. Okay, so a few other points that I would like to make re Franco-Nevada. So here are my key points here. We've got diversification. They're invested in not just the metals, mainly the precious metals, but they've got access to energy exposure, and that's including hydrocarbons in the Permian, but also solar and wind type production. Here we've got what I think are probably the three main catalysts for this particular company. So higher production growth. Now, whether that's because Cobre Panama, one of their interests, was taken offline last year because the Panamanians just decided to snatch defeat from the jaws of victory and close down the mine on constitutional grounds. So this is egregious. They're going to have the mine made about 5% of GDP. It's all going to be sorted out in arbitration. There's a new president in this year. He's going to make a decision, apparently, from what I've been reading, by the end of January. Be that as it may or may not, let's take a look at production guidance. Okay, so you'll see now where I'm getting the next numbers from. So total gold equivalent ounces sold, we can see here. If you exclude Cobre Panama, you read up until the blue line, and then if you want to add it back in, if you, like I do, think eventually this will get solved, and either this mine will come back on or their new stream of production will come back online somewhere there over the quarter. I think it's reasonable to say they're going to get 150 to 160 gold equivalent ounces per quarter. This is where I've taken some liberty and I've said, okay, well, if we had that, that's annualizing roughly to 600,000 gold equivalent ounces per year. So a little bit less than what Wheaton are planning to get to in the next 2 years. But I think the longer term bet is that Franco are going to be there right at the end. So if you want to make a comparison to it's a bad comparison, but to the offshore sector, these guys would be more like Valaris. Excuse me, Wheaton would be more like Valaris and renewables, and Franco would be like um, Transocean, since they're really playing for those longer ultimate call option on day rates. It's probably not a good analogy, but I thought I'd throw it out there. 600K gold equivalent ounces. I think they'll get there sooner than most people expect. Perhaps it'll take a couple of years. We'll see. Then, of course, you could have a higher gold equivalent ounce. Now, careful here. This could be higher gold price, but not necessarily or exclusively. It could be a higher gold price and lower other commodities, or it could be a high gold price and higher commodities, or a mixture of the two. Here we'll see where they're exposed. And you'll see here some things that you probably didn't expect if you weren't familiar with the company. So they already have exposure to platinum group metals, iron ore, and down here you'll see, look at this, some oil exposure. So you've got Edmonton Light up in the northern province of the United States there, apparently. You've got West Texas Intermediate, and you've got Henry Hub. So they've got exposure to gas, oil, and all the other good stuff that we know and love. Be that as it may, I'm getting to the point where I think it's reasonable to suggest that these guys eventually are going to get somewhere of a 3,000 gold equivalent ounce for their sales. And that's what I've underwritten them at. What's the market normally paying for something like this? For the best, arguably best in class company, if we look over the last 5 years, steadily the average has been around 33 times their free cash flow is what the market has been willing to pay. Okay. I don't know if we'll get back in there, but I think it's a reasonable case that's on the cards. All right. So if we had a stabilization back to 32 times the free cash flow, if we can hit this ballpark figure of 600,000 gold equivalent ounces per annum, and I'm going to underwrite it at 3,000. Okay. Obviously, you can put your own numbers in, and if you disagree, great. Disagree, but just do this on your own and see what you come up with. 1.8 billion doesn't seem an unreasonable revenue target for this particular company, and 65% free cash flow margin would be reasonably typical. I think you might find that get even higher in a higher gold price environment. But anyway, let's just leave it at that. And that suggests roughly 38 billion for the company using that particular method. At the current share count, that would be roughly $199 a share. So quite a little bit of upside from where we are today. I own the stock. I'm long the stock. Just wanted to point out. So January, we're up in terms of the eToro portfolio and 10%. Let's not get excited because they're also up, I think, like 20% in December or 15% in December. And then we had a victim of tax loss selling because I owned a lot of offshore. Forget about the month to month, focus on the long term. Franco, there's about 7% of the entire portfolio. Okay. And I expect this over the very long term to continue to compound at rates similar or in the ballpark figure of 15%. A final comment on that might be that in a previous article I wrote, why I think that 15% is really a hurdle rate. If I don't think that I can comfortably get 13 to 15% in an equity investment, there's no reason why I would sell my gold and put that into that equity investment. It really just doesn't make sense given the current environment, in my view. If you want to know my logic behind that, you can read through. This part is not behind a paywall, so you can see where I'm coming from there. And last but not least, let's revisit our friends in Sibanye Stillwater. So 500 million was not given, but Franco and Sibanye entered into an agreement, royalty and streaming agreement, for just a lazy $500 million there. So that tells us a few things. First of all, Franco-Nevada and all the smart people there certainly think that Sibanye is going to be a viable producer going into the future. And when we look at what that stream involves, we're also going to get another peek into how Franco-Nevada sees the future from their end in terms of metal uses. So we'll skim through this. Won't take too long. This is publicly available. You guys can read through that at your own time. So they've entered into a stream, okay, where They can have, for the life of mine, their gold stream will lie. So they'll have this stream active in terms of the gold equivalent for as long as the mine is producing, and the platinum component for 25 years. Now, let's take a look at what type of pricing they were able to secure. So they put up 500 million in order to develop these mines. Sibanye is roughly 15% of global platinum supply. So Franco certainly doesn't think that combustion engines are going away anytime soon. And 70% gold, 30% platinum deliveries. So this gives us a really good piece of diversification. And if I draw your attention to the costs, where were they? It is 5% of spot prices respective. In the case of gold, we'll go up to 10%. But being able to buy at 5% or whatever the spot price is for, excuse me, some of these mines going up to 2070 is obviously a really, really attractive proposition. So that's it, guys. Hopefully you enjoyed this uptake. The eToro portfolio is publicly available, and Maverick Life portfolio behind the paywall at the ROI Club Substack. Links are in the description. Let me know what you think. Please do subscribe, like, and comment on the video so that the YouTube algorithm keeps it current. And I'll look forward to catching up with you in another episode of the ROI channel shortly. Take care.